Good day all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 15th of July, 2019, just getting on to 3:55 p.m. Central Daylight Time. Well, you can see the grains are down. Now, why do you think? We're in the middle of July. The weather has gotten good in terms of warmth. Next thing that's happening, we get warm, a bit dry, and then the rains keep coming in. So you go to a point where you first get the planting, and we had that in early to late June, literally the whole month of June, where things got thrown off kilter. Then the fields that did get planted started growing amply. Now we're beginning to see the crop conditions, and I'll get into those in a minute. But for the moment being, we've got just enough heat, we're getting enough moisture when the crops need it, and it's putting selling pressure on these markets. Doesn't change acreage and things of that nature, but it does impact yields per acre, and you've got to look at that. On the energy market, Hurricane Barry, well, a hurricane for a couple of hours maybe, but primarily a tropical storm, and a storm that did not do the widespread damage it could have, especially into the energy sector. So when you play these things and you're trying to get a feel for them, very difficult, because God's the only one that knows what these storms are going to do at the very end. In the case of this, it looks as though the refineries are going to get back online. It looks as though there wasn't any real serious damage, so you're getting your pullback. As for nat gas, same thing. And in fact, the nat gas, what you have to start watching is the market on a seasonal basis at this part to the end of July often starts running into toppy action. As for the stock market, new all-time highs in several indices. Metal market still acting good. Most of the currencies waffling today against the U.S. dollar. So on the weekly area chart of closes, well, today's the first day of the week, so here we are down a nickel. But you can see the market had found support versus its 18-week moving average of closes. Made the highest high close last week that it recently has. In fact, hadn't been up there all the way through almost the beginning of the year. When we take a look and you see just how it looks on a weekly bar chart, remember this chart here is the weekly, this is the daily now. We didn't get near that high back here. We've had a nice run to the upside, and now the market's acting a bit toppy. The market did get itself through this important area, the 934.25 zone, which means that the market has a lower low and a higher high pattern. It's out of any trend. Without today's action, what you did have coming into today was this pattern of constantly lower highs and lower lows. Now you've broken through that level, so you end that pattern. What you next do, at least what I do on charts, is I look to see where the 18-day average of closes is. I call that line in the sand. In this case, you've also got the 100-day average very close to it. So we have a combination of the 18 and the 100-day average between, let's say at 916.75 to 909.25. So if the market slips back, that might be where the market ends up. Before I go any further, let's look at the crop progress report, and then we'll finish the charts. For the corn, 58% good to excellent. Last week we had 57%. That's the number I'm looking at, so it's pretty much the same. Silking has doubled from last week. We know a lot of stuff is behind. We also know that in soybeans, 54% good to excellent. And last week was 53. The amount of fair to poor stayed about the same. In the Monday crop report, the emerged progress, the beans popping right now, are 95% complete compared to last week's 90. So we're seeing progress there. And blooming's begun at 22% compared to last week's 10%. Then we get to the spring wheat, 76% good to excellent versus last week's 78%. It's a little downgrade there, but nothing that serious. Spring wheat headed progress, 78% versus last week's 56%. So the crop making good progress. And in cotton, 56% good to excellent versus last week's 54%. Very similar numbers through here. I don't see any problems is the key off the crop progress report. And I think that's the first thing that we look at. So as we move on here, I'm going to call the market neutralize the downtrend. The bias is up. How the market's going to act, if I'm assuming it's going to drop into these ranges, that will tell the next story. Because since the market's out of a trend, and if you're longer term bullish, you want to develop a pattern out of this where you get eventually a low in this area, whatever that number is, where you get higher lows and eventually higher highs to get an uptrend, if you're going to get an uptrend at all. What the market failed on doing is it did not make a serious run to the upper Bollinger Band, and I don't see the crop progress report, in my estimation, kicking that part off either. In terms of market momentum, it is still up. The bias is up. We're trendless with support just below the market in two ranges, 916 and 3/4, 909 and 1/4. In the meal market, let's get back to Friday. On Friday, you had this pattern where you were moving yourself higher. If the market backs off, you got the 18-day and the 100 in the green. Today, the market makes that higher move, gets over these previous highs, and pulls back with an outside day down. That means you took out the previous day's high and low, closed lower, and found its support sitting here right through at 312.70. The lows on Friday, by the way, were 312.90, today 312.40. So you can see what happened through there. I would view today's high going forward as a very important high, because if you can take that out, eventually it's going to be key where this Bollinger Band comes in. The word is eventually. I don't know if it'll do it or not. The pattern, now, if we come back to this low, you can see the low of this day was 305.70. This low was 306.20. So you have the lower low and the higher high pattern in the market. Soybean oil, as you unwind certain parts of a bullishness, well, the oil, the market that tags along, well, that market got propped up today. It wasn't down anywhere near as much as the other markets, down 2 ticks on the day. You've got the pattern of higher highs, higher lows. The trend is still up in the market. Serious resistance between 28.75 to 28.85, the 100-day average to the Bollinger Band, with support at 28.30. The thing that bothers me about soybean oil at this time of the year, it's almost a follower. It gets whipped around by the other two. It's not the leader of itself. In the corn market, unable to make a serious run at the upper Bollinger Band. Admittedly, you got to 464 3/4 today. That number's 468. Being about 3 cents away is not a serious run. And then all of a sudden, the market comes cracking on down, just missed hitting the 18-day average by 1/8. Trades in quarters, so because the average is there, if you rounded, they got together, 446, and if you round 445 3/4 towards price, it would actually be 446. So the market fell back to that. What's the number on the chart you don't want taken out? Well, if you're a bull, the number you don't want taken out is right here. You don't want this low of 430 1/4 taken out. If it is, then you got to rebuild this chart literally from scratch, back and forth action. So what I'm expecting now is just what I said. We're in that change, that transition period where we now look to see how the crops actually grow that are in the ground, and they get just enough rain, just enough heat. You get into a bearish phase. Then you're going to get into August when you're going to get in the corn market new surveys from the USDA to show us the acreage numbers we're going to deal with, and that'll be it. That'll be the acreage. And people, I've been around this. They're going to use that number and project where this crop is going to be. So that's the big number. We got about 2 weeks to kill, as I call it, before we get those numbers. In the wheat market, big reversal to the downside. You can see that. The resistance pretty clear at the 18-day moving average of closes. And yes, you can get by it, but the market couldn't stay over it. So now you get a pattern of a lower low, higher high, and an oversold market. Don't know what to tell you on something like that. The sugar market surprised me. It's weaker than I thought it would be. It was certainly in the bear side coming in on Friday, oversold. I thought that maybe the Bollinger Band would do a better job of holding the market than it did, but it couldn't do it, and the market closed sharply under it, actually. You finished 1206, which is 7 points under that number. I wouldn't be surprised if you fight at whatever that number is tomorrow, but the trend down, the bias down because you're under the 18-day average, and you are oversold. In the coffee market, battleground, and let's go back to Friday. I keep going back to Friday because on Fridays I do monthly and weekly charts primarily the weeklies. And it's good to catch up with where you were. You had come down last Wednesday, if you will, challenged the 18-day average, held it on Thursday, Now look what the markets did. Well, actually, I got my days wrong. It was Friday and Thursday. And now the market made the lowest low for this break and came roaring back to the upside. I'll call that a rejection of trying to stay on the downside under the 18-day average of closes. I cannot call it a trend reversal. I can just say it negated the downtrend that had been in place. The cocoa market a lot weaker than I thought it was going to be. I was thinking this market was going to try to hold this 18-day average of closes and not try to break through this 2430 area. In doing so, it just goes now from upper Bollinger Band basically to lower Bollinger Band. That's not a trend. You're just whipping back and forth. Momentum still pointing down in the market. In the cotton market, if we do a count here, you had finished the day at 62.68 under the Bollinger Band. If we do this day, you were under the Bollinger Band, so that's 2 days in a row under it. On this day, the market finished 63.82 under 63.95. 3 days in a row under the Bollinger Band. And on this day, you were at 63.28 under the Bollinger Band. That's 4. You know how often I tell you, it's rare that you get 5. There's no magic, but once you're like this, you're playing that you're going to get a move back to the right-hand side. 95% of the time, the market will trade within Bollinger Bands. Bollinger Band to me means when you hit it, that's where I expect pros to take some money off the table. This is called riding the Bollinger Band, but it doesn't matter if you're riding it or not. If you're riding it, you're still looking for the market to get back to the right-hand side, and that's all that happened today. It does not mean this is a trend reversal in any manner whatsoever. It means the market's getting more balanced, still in a bearish configuration. In the October cattle, we still have the pattern of higher lows, higher highs. Here too, I'll call this riding the Bollinger Band. Notice how you hit it, you back off. You hit it, you back off. That will act as your resistance point on the way up. And where's the other resistance if the market were to get a piece of real bullish news? I would call it between the upper Bollinger Band and the 100-day average of closes. Now, how many days do we have where both numbers that make up the slow stochastic are over 80? Well, we certainly had that today, day 1. We had it yesterday, day 2, and we had it the day before. So you have 3 days in a row, not 4. The market is what we call right now embedded, which means if this market decides to first break instead of making higher highs, I am going to expect to see pros buying the market until the red line closes back under 80, and then you call it a lost embedded reading, which would often lead to price in the 18-day average trying to get together. You're not at that point. You're in the embedded point right now. In the feeder cattle, it's the same thing. You're embedded. You have the pattern of higher lows, higher highs. Here, too, you were riding that Bollinger Band, and all you've done is move to the right-hand side. But the people that came out there, well, they have the ability to buy in a bit lower, should that be what they want to do. The bias is up, the trend is up, and momentum is locked in until the red line closes under 80. In the hog market, you have an uptrend. In the ox, you have higher lows, certainly higher highs. You are overbought. Bit of danger here. If the market can extend itself, great, to 76.68. What I think was setting back the hogs a little today, I don't believe China told the truth. China today came out with numbers that they culled about 25-30% of their hogs. Nonsense. Probably 50% or better from the reports we're reading from a lot of packing houses that have affiliation there. But whatever they want to say, fine. So they're giving you the impression they have a ways to go and their herd's a little bit bigger than we're supposed to think. Okay. Put it all together, that's the game plan. So what do we have for you? Well, you know, what we write about is what's going on here, the ethanol markets, of course, the meat markets for you traders that follow that. And we do this in our Linn research. Now, once you try, you probably get hooked on it. And the reason is it's commodity reports, especially be it the grain markets, the meat markets, the soft commodities, in a way for both users, speculators, commercials. All part of this market coming in. And we tell you who's buying, who's doing the selling. We start this, by the way, on Sunday night early. so that when the markets open Sunday, you have information in your hand. Then I try to fill in a lot with the financial reports for you as the day goes on. But if you haven't seen our information or tried it, we'd like to put it in your hand, and we can do it in one of several ways. We can email it, or you can get it through any multiple of our different platforms, from your mobile phone to desktop platforms. How do you try this? Well, go to our website. You'll see our carousel of free offers. Simply click on it for your free offerings. Pick the ones you want. We'll take care of it the rest of the way. Or you can click up here if you're watching me on YouTube. It'll take you right to that carousel page. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.